We are going to wrap up the show, though, with a look at Goodwin, the specialist engineer. Has been around a long time. Still, as we said at the top, flying under the radar somewhat. Alex Newman joins us now to discuss the company in a little bit more detail. Can you give us a very brief potted history of the business for people who don't know about it, Alex, and tell us a bit about what it does, and then we'll get into some of the more recent news flow on the business.
I mean, it's quite a long history. I think they've been around for more than 140 years. They are a refractory engineer, mechanical engineer. So a lot of that is very sort of very heavy engineering, where they are basically the refractory side of it is almost proofing metalwork to withstand incredible stress or temperatures or conditions. So they're very niche and specialist in that. They've obviously grown out of a pedigree of refractory engineering from the 19th century. And then on the engineering side, it's sort of jointly, though they do split out the two divisions, but it's kind of related to the refractory side. They are a kind of a casting specialist and also designer of very complex projects, and that's what they do. It's almost as interesting, really, or perhaps more interesting on who they are. And they are the Goodwin name is the family, which is still six generations into the company's history, being very tightly controlled in terms of the shareholder register, but also the management by the Goodwin family. So it's a quite remarkable case of very of sort of family stewardship. And I think they listed in the stock on the stock exchange in the 50s, but this kind of family oversight, they're based in Stoke-on-Trent, has continued to this day. And I mean, we can sort of get into a little bit more on what they've been up to recently, but it's sort of remarkable in that they just don't really behave like other companies. They don't court shareholders in the way that almost every other company does. They stick to their knitting. I was just looking at their kind of trading updates, and I think this trading update they released this week, if you sort of ignore a couple of directors' dealings, one procedural notice they filed on the change in their audit committee, it's something like the third update they've given this year. So in that sense, it's an interesting company because we only find out about what they're up to a few times a year. They are not on the road marketing themselves, but the latest evidence is that there's absolutely enormous momentum in the business, despite its history and the kind of business lines that you might not associate with extreme growth.
Mm. I mean, in the past, one of, well, I say weakness, but it's not quite right because we might get to its fantastic long-term, certainly share price performance in a moment. But it was quite sensitive to the oil price in some ways in terms of how operationally it's performing, which is slightly less of the case nowadays, given the way it's diversified a little bit in recent years.
Yeah, absolutely. So I think one of the use cases for their specialisms was in large oil and gas projects. So doing the castings for those, helping with the design, kind of specialist subcontractor jobs that they would be working with the larger oil field services companies. 10 years ago, listeners sort of remember that there was an enormous crash in the oil price where you had US shale really started to boom, OPEC sought to defend their turf, everyone kind of lost. So there was a massive surge in supply, the price crashed, and that obviously meant that there was a lot of cutback in long-term projects, but also the nature of the oil and gas industry changed a little bit because large projects, the sort of which Goodwin had become associated with or worked on, were less viable or less likely to be sanctioned. You've got, the way shale works is you've got lots and lots of drilling sites which they incur their own capex, but they are technically less complicated than the sort of jobs that Goodwin would have worked on in the past. So a huge shrink in their kind of long-term pipeline. But yeah, like if you look at the annual report, I think their workload, as they describe it, kind of equivalent to their backlog, that's focused on oil and gas, LNG, and petrochemical stuff, is was down to about 9% of their mix. So they're really not they're not an oil field services company anymore, I think it's fair to say.
Mm. And the trading update, we've alluded to it already a few times. It was very well received. What do we see in that in terms of where particularly the business is firing on all cylinders at the moment?
Yeah, so I mean, they had this really strong update at the end of July. It was only 7 weeks ago, where they, like I said, they broke out that workload figure, which was a lot higher than their rate for the year to April. They spoke about their all of their divisions in such glowing terms that it was almost out of keeping in their quite staid, conservative tone that you normally find in their annual reports. But this trading update, coming so soon after such a positive update, in which I should add they doubled the dividend, which for a conservatively run company was sort of real statement of confidence. Their order book has increased, by the looks of it, in just the space of 7 weeks by 24%. So it's a little bit confusing actually. Because when they updated this week, they said our workload as of April was 287 million. But if you look back in the annual report, it does say that they at the time of writing it was 287. So either way, if it's a few weeks or if it was 4 months, a quarter jump in their workload is pretty significant. And it's these big long-term contracts they have, which are really shining through. So they've got a huge deal to build the nuclear waste tanks at Sellafield. They're kind of the only engineer that can do this. They've said several times that they are basically just waiting for those orders to come in, and they're going to be dozens more. I think they've done a few dozen so far. So that is expanding that order flow. Their castings business is firing on all cylinders. They talk about their satellite business, which they've also developed, doing very well. None of this, even their training update, we mentioned what they think is going to be the biggest source of revenues in the coming years, which is this product Develco that they have developed, and which they think is going to be a world-leading polymer. So it was a significant upgrade to what the business is doing. And there was also an indication from a deal they signed with Northrop, which is kind of an existing customer, but sounds like it's going to lead to a lot more work, which set the shares alight again.
Yeah, I mean the share price moves have been quite extraordinary in some ways, haven't they? Which perhaps speaks to relative lack of liquidity in the company or in the company shares. It's not well covered by analysts at all. You wrote about it at the start of September, after which it had already had a very good run by that point. But even you writing about it after that seemed to send the shares up, unless that was something we've missed. It seemed to send the shares up quite a bit, which maybe speaks to liquidity, maybe speaks to the respect with which you're held, Alex. Who knows? But either way, the price clearly has shot up. I think it's about 60-80% this year, something like that, 85% this year alone. But it also has a very good long-term record in terms of compounding returns over time too, doesn't it? This isn't a sudden good year after several fallow years or anything like that.
Yeah, exactly. I think the fallow years were that second half of the last decade that we talked about, the back of the oil and gas slump, that they needed to rebuild themselves. But I mean, who's going to be selling this company at the moment, I suppose, is one question, because there's clearly such momentum behind them. I mean, certainly not the family itself, who do, like as we said, control a lot of the shares. But as we talked about, it is such an unusual setup in that they're not covered by analysts, because there's, I don't think the company sees the point really in doing those kind of marketing exercises, although they do obviously have brokers. They're probably not held by some fund managers just because of the way they disclose and their corporate governance, which is actually a very, very high standard, but it just doesn't meet some of the things that certain fund managers might look for. And that lack of access might mean that they're discarded, or just overlooked by a lot of possible buyers. So I don't know why the shares going up. It's it's kind of that oil and gas collapse was probably the making of this company in its modern form. It's obviously had multiple remakings and remoldings because it's been around for such a long time, but they're now you know fully diversified. They're probably more of a defense company, if anything, now, because so much of their contracts are with um, various governments, sort of marine spending, and they are, mission critical suppliers to those. So there's a very secure long term sources of cash for them. They and defense continues to be an enormous theme. So if it's partly the buying is people costing on uh, to what the business has become there, it's just a recognition that this is a business that's probably never going to be sold. It's it's just unusual in all of the good ways that you might look for in a long term holding.
Mm.
So yeah, I mean, we're speaking with John Lord Lee the other day. He's a holder, and talking about it being one of the best kept secrets. I mean, I think the secret is also just starting to be a lot more widely known now. They're
Mm.
a FTSE 250 company. They're heading, I think, in the next few years potentially to the FTSE 100 if they carry on compounding at the rate they have been.
Yeah, you make a good point about the Lee and the IC podcast, which also features Goodwin, the most recent episode. So do check that out if you're interested in a bit more. I want to wrap up just by talking about the valuation, which certain valuation metrics, given there's zero analyst coverage, are by definition therefore quite difficult because there are no forward earnings consensus or anything like that. Clearly, this does have a lot of momentum with it as a stock, and we've seen countless examples in recent years of the dangers of getting in the way of that momentum to an extent. But how do we sort of go about making a valuation case, if at all, given some of these difficulties, but also given the fact the shares have come a really long way this year?
Yeah, tricky one. So I mean, I think we can always sort of return to fundamentals. So
Mm.
so in the year to April, pre-tax profit was 34 million pounds. They've reduced their gearing considerably. So it's very, very clean balance sheet. If the order book has stepped up, another quarter, just in the last few weeks, that was already running about a third above the sales that they generated last year. So yeah, I mean, I think 50 million pounds pre-tax profit is probably not an unreasonable assumption for each of the next couple of years. That would put the stock, I think they're trading on £1 billion on a sort of pre-tax multiple of about 20. And with this sort of momentum behind it, you can see why people have bid up the shares, investors have bid up the shares to this level. Yeah, I think that is a fair point, though. The sort of limited disclosure and the sticking to their knitting means that it is a harder company to value. So I think a fair bit of this is sentiment and reading between the lines of what the directors, their positivity about the business. So yeah, that's a hard thing to square with any number because it's all subjective. But I don't think this is a runaway valuation based on the numbers they have disclosed and the order book building as it is. So yeah, I think yeah, a £1 billion company is probably fair value for Goodwin now, as small as some people may consider them, given just where their sales were a few years ago.
Indeed. Well, they've had a good end to this period, the first 140 something years. We'll see what happens over the next few years, and I'm sure we'll be keeping a close eye given what's happened in recent weeks.